Hello, everyone, and welcome to the program Business Point on Global Television. I am Samuel Odi. Many thanks for joining on today's edition of the program as we tend to dive into global business updates where we saw Nigerian all-share index wrapped up the previous week at 0.66% gain, and we also saw a bit of backlogs and also depreciation that was suffered, and a little bit of gain that the Nigerian naira was able to get. But based on those facts, still we still witness its certain level of depreciation. But let me bring you up to speed with what the current Nigerian all-share index is saying as at the week being wrapped up last week. Nigerian all-share index staged a 0.66% correction, closed positive as banking sector shines. Nigerian all-share index concluded the week ended March 2020, 2025, 28th of March 2025 on a positive note, gaining around 697.68 points, driven by a robust performance in the banking sector. This increase reflects a weekly gain of 0.66% as the index advanced from the prior week's closing of 104,962.96 points to 105,660.64 points, successfully returning above the crucial 105,000 level and it had slipped from. Trading activities rose by 4.96%, with volume of shares exchanged increasingly from 2.9 billion to 3 billion shares. This increase in trading activities, combined with favorable price movement, elevated the market's capitalization from 65.8 trillion naira to 66.2 trillion, surpassing the 66 trillion threshold, respectively. During the week, 43 stocks appreciated an improvement compared to the 32 that was experienced gains in the previous weeks. Markets overview shows that the Nigerian stock market demonstrated a commendable recovery back to the 105,000 level, with most sectors apart from oil and gas index concluding the week in positive territory. The all-share index started the week strongly, showcasing significant gain as of Monday and a slight increase also on Tuesday. However, momentum won on Wednesday and Thursday, resulting in minor declines before Friday's trading concluded on a positive note, and we saw a bullish trend all through. Opening the week, the business week, the market outlook has projected that the all-share index appears to be undergoing a correction as it rises above 105,000 mark, which it had previously declined from. Should this positive momentum in the banking sector persist, the index could potentially exceed the 106,000 mark in the coming days. So looking at all of this now, a couple of weeks ago, talking about last week, most significantly, we saw Monday and Tuesday that the Nigerian Stock Exchange market, had a bullish trend, and we witnessed a significant level of gains on Monday and Tuesday, and then Wednesday, Thursday, the market depreciated. But before the close of business as of Thursday, forecast and projection came that the market is going to be trading on a bullish trend all through Friday, and is going to advance us, hitting back the 105,000 threshold, which it slipped away from a couple of prior weeks before this just concluding week. So we've seen all of those significance, and we've seen all of those growth, and we've seen the gains, and all of these these gains can be attributed to investor confidence and the fact that investors were looking to buy into the markets when the prices are low, but the losses that were suffered in the Nigerian all-share index in the early months of March and as well as February contributed to this significant growth that we're seeing of hitting back the 105,000 threshold that we usually have. And then in the coming days, as the public holidays rounding off, projection says that the bullish trend and the bullish trajectory is actually going to continue until we hit around 106,000 points in the Nigerian All-Share Index. So we're bringing you updates of what the current Nigerian All-Share Index is looking at. The Nigerian stock market is talking about as the market resumes officially tomorrow. Moving away from that, Nigeria struggled to regain confidence despite recent gains. This is coming from the Bureau de Change operators here in Abuja. Bureau de Change operators have revealed that despite the Naira's gain at the foreign exchange markets during the week, the local currency is still suffering from a loss of confidence. The licensed currency trader said that although it's usually a good development to see Naira gain strength against other foreign currencies, it however noted that the local currency is overburdened by devaluation and official market and depreciation at the open market. This was made known by the president of the Association of Bureau de Change Operators in Nigeria, Aminu Gwandabe. Aminu said the appreciation of Naira can be attributed to the intervention of the Central Bank of Nigeria at the electronic foreign exchange matching system window, which has significantly boosted supplies as well as weakened demand in the market. Naira experiencing attacks. APCON Bourse had earlier revealed that the Naira is fast becoming the most unpredictable currency in the world, noting that the local currency has been greatly affected by all kinds of wars, ranging from trade rates as well as speculated attacks. Aminu had earlier highlighted some of the challenges affecting the forex market, including global economy uncertainty, regulatory challenges, and technology advancements and market versatility. The APCON boss noted that the economic slowdown in major economies like the US, Europe, and China have resulted in decreased trade volume and increased market versatility. He also stated that the recapitalization policy of the Bureau de Change has given rise and begin to rise and to give compliance costs for forex brokers and impacted market liquidity. So looking at plans now to sustain have a sustainable Naira and a positive run performance of the Naira, Aminu urged the Central Bank of Nigeria to always adopt forward communication strategy on good news and play down the bad news overload as part of the ways to sustain good performance of Naira in the foreign exchange market. Naira appreciated significantly at the open market from a low of 1,580 Naira per dollar to a higher level of 1,545 Naira per dollar during the week. The CBN intervention significantly boosted supplies at the window, coupled with a weaker demand in the market. To tackle the volatility, the Central Bank of Nigeria has been announcing several measures to tackle volatility in the foreign exchange market, which the speculators usually capitalize on to put pressure on Nigerian and Naira. So looking at all of these sectors and angles now, we've seen that the Nigerian Naira is beginning to rebound gradually based on the projection by President Bola Ahmed Tinubu and his team that Naira is going to be stable at 1,500 Naira come December 2025. Inflation rate, at the other hand, is looking to be maintained at 15% at the end of 2025. But the major drivers of inflation, as we all know, are the food that we always consume. That's household items are the major drivers of inflation. But we are beginning to see a significant reduction on that number. That's talking about the cost of food items. But still, there are still trade war going on that is also affecting the Nigerian Naira, talking about the trade war going on in the oil and gas sector, which we're still waiting on the NNPC and the team, the committee in charge of the Crude for Naira initiative that has been set aside by the president so as to help Naira stay afloat and also compete with other foreign currencies. Based on what Aminu, that's the president of the Bureau de Change Operators here in Abuja, says, he said that trade wars are affecting, and then not just here in Nigeria, US, Europe, and as well as China. So we'll be having all of this conversation. But looking at all of these angles now, the Central Bank of Nigeria have been announcing policies that would be used to maintain and tackle versatility in the foreign exchange market, which speculators usually capitalize on to put pressure on Nigeria. Now, the Central Bank Governor Yemi Cardoso and his team are working on policies that would help the Nigerian naira, stay afloat and be able to tackle back when the volatility from other high-earning currencies, come crashing down. So we'll be looking at all of that. We'll be having this conversation in the coming days on the policies that are being introduced by the Central Bank of Nigeria that is going to also help SMEs and also business, small SMEs and large corporate business entities as well to be able to stay afloat, looking at the current tariff hikes that are being introduced by President Donald Trump and the tax reform policies that is also going to be introduced here in Nigeria. So we'll be looking at all of those and then how it's going to impact and affect the market, and also how it's also going to impact the GDP and then the growth. The end goal of whatever policy that will be, initiated or that will be introduced by the Central Bank of Nigeria and Governor Yemi Kado. So has to be in line with President Bola Tinubu's plan for Nigerian inflation to drop at 15% come December, and also for the naira to remain its level and to be stabilized at 1,500 naira. We'll be going on a quick break, and then when we return back, we'll be having conversation around cryptocurrency and how Donald Trump's policies and tariff policies have been affecting the market. Stay with us. We'll be right back.
Do you know that global television can be watched in Nigeria and all over the world?
Download the Global TV Nigerian mobile app for Android and iOS devices to watch global television real-time from around the world. What are you waiting for?
Start downloading and stay connected to global television.
Yes, many thanks for staying with us. Crypto market loses $130 billion as Donald Trump, as Trump's tariff plans take effect this week. The cryptocurrency market experienced a sharp decline last week, shredding over $130 billion in market capitalization as investors braced for the impact of President Donald Trump's upcoming tariffs. Dubbed Liberation Day, the tariffs are set to take effect this week, targeting goods from overseas. As of Monday morning, Bitcoin fell below 82,000 mark, trading at approximately $81,700. This marks the seventh consecutive day of lower lows for BTC and the US dollar, driven by mounting concerns over Trump's tariff policies and their ripple effect on the global markets. The sell-off in the US stock future has further exacerbated the decline, reflecting broader investors' unease. And also, despite the bearish sentiment, institutional investors continue to show interest in Bitcoin, with inflow remaining positive. Analysts are divided on the outlook for Bitcoin as it stands now, with Shock Money Lizard predicting a lower bottom between 80,000 and 82,000 US dollars, while veteran trader Peter Brandon warns of a bearish wage breaking down that could push price as low as $65,000. XPR also experienced SPR's dramatic decline. Meanwhile, SPR has seen a significant and a dramatic 40% jump from the recent multiple year high of $3.40, now consolidating around $2.19. Encouraging developments such as SEC's decision to drop the case against Ripple has failed to offset the broader market sell-offs. Analysts know that XPR remains in a consolidation phase with support at $1.77 and resistance at $3.21. A breakout above $3.21 could be required to signal a bullish trend reversal. Major cryptocurrencies have also suffered significant losses over the past week, where Ethereum fell by 10.9%, Ripple, talking about XPR, fell by 15%, Solana coin also fell by 10.1%, and Bitcoin fell by 5.9%. So looking at all of this, the trade war going on currently in the crude oil and gas sector and President Donald Trump's tariff hike that is set to get implemented starting from the 2nd of April 2025, talking about tomorrow now, is something that is actually affecting the global market, and it's having its negative effects on Africa, not just Africa, but the entire global business platforms. So looking at all of this now, cryptocurrency is having its own challenges. Now, focus currently as we speak, Bitcoin is at 84,000 US dollars as we speak currently. But now, looking at this current tariff hike now, we have seen projections that Bitcoin is still going to fall down between 80 to 82,000 US dollars. We've seen other projections that have said that Bitcoin is still going to fall down to around 60 to 65,000 US dollars. And then the ultimate projection for the year is that Bitcoin is supposed to reach around 150 to 200,000 US dollars before the close of the year 2025. Talking about this projection was made in January, and it's expected to see this effect of it getting to around 150,000 US dollars to $200,000 by the end of December 2025. But with this current tariff hikes and then implementation by President Donald Trump is now keeping a whole lot of investors and a whole lot of analysts at the verge, wondering what would happen if all of these tariffs are being implemented. And also, it's not just going to be segregated to one region alone, but from the reports that we got from the State House, it says that it's going to affect all countries. So nobody is being left out. Africa is not being left out. So at the long run now, how is this going to affect businesses? You know, this part of the continent, this part of the world, are beginning to, have agricultural and also Bitcoin adaptation into businesses. So now cryptocurrency adaptation in Africa is something that is on the massive rise, and also Nigeria is one of the leading nations that actually trade on cryptocurrencies. Now, with these current tariff hikes, now we're going to find out how it's going to affect the world of crypto, if it's going to have a negative or a positive effect at the long run, because currently now investors are hoarding and then they are just uncertain of what the future holds in the world of cryptocurrency. But we would see how this tariff hikes is going to implement or affect the market starting from tomorrow, given the fact that President Donald Trump says his tariff hikes are going to start being implemented from the 2nd of April 2025. So we would see how all of that pans out in the next couple of days, how it's going to affect businesses. Talking about trade and also tariff hike, let's have a conversation where China, Japan, and South Africa, South Korea, unite to bolster regional trade amid looming U.S. tariffs hike. China, Japan, and South Korea, three of the Asia's leading economy powerhouses, have pledged to strengthen their regional trade cooperation as a brace for the impact of U.S. President Donald Trump's tariffs, set to take effect as of Wednesday, the 2nd of April. The commitment was made during the first economic dialogue between the three nations in 5 years, held just this past weekend. The trade ministers of three countries agreed to pursue comprehensive and high-level negotiations for territorial free trade agreements aimed at promoting both regional and global trade. In a joint statement released after meeting, the ministers emphasized the importance of collaboration to mitigate the economic fallout from Trump's tariffs policies. South Korean Trade Minister and Kang Dong-gan highlighted need to strengthen the implementation of the Regional Comprehensive Economic Partnership, a trade path involving all three nations. So possible challenges and strategical goals that they might experience despite their shared economic interests. China, Japan, and South Korea have faced long-standing tension over territorial disputes, which have hindered progress on a territorial FTA since talks began in the year 2012. However, ministers acknowledge the urgency of responding jointly to global challenge, particularly in light of increasing fumigations in the global economy. So looking at all of this now, countries now are beginning to come together just to make sure that the business continues going on the global stage despite the implementation of Donald Trump's tariff hike. Now, Donald Trump placed a sanction that any country that buys crude from Venezuela would be paying the 25% tariff hike, which is also something that is being looked into. So the trade war going on currently is massive, and countries are beginning to align themselves with each other, despite we all know the war or the fight going on between China, Japan, and South Korea, now coming together to join forces so as to, help the global economy and also bolster businesses within their region. It's something that is admirably, and also it's a call for other countries, and then it's also a call for Africa to look into ways for partnership as well as to help bolster its regional economy based on the current tariff hikes that Donald Trump has been introducing and is set to implement. During his campaign, he made it crystal clear that he is going to focus more on America first. He was very vocal about it, and when it came to oil, he made mention of the fact that, America has more oil in reserve that they would ever need, and he made mention of drilling, baby drilling. On the other note, policymakers and public affairs analysts have argued that the current trade war going on is actually going to, in the global scene, and talking about the oil sector now, is actually going to affect smaller economies, and then SMEs will pay more when all of those things happen. But on the other hand, some individuals have said it's actually looking good based on the fact that the prices now of crude oil is actually going to depreciate, and when that does happen, talking about the Nigerian markets now, automatically we are going to see cost of fuel price in the petrol station being dropped down. But on the other note, we still have issues going on around the Crude for Naira initiative, which, the NNPC and Dangote refinery and other refineries in Nigeria are still trying to put heads together to see how this project and then this contract is going to continue, based on the fact that the first phase expired yesterday, which was 31st of March. So we are still awaiting the government to see what the next phase is going to look like and how long the contract is going to, last for. On the other note, we've seen Dangote refinery paused selling crude for Naira and then has resumed back to selling in dollar. All of these things are actually negatively going to impact the economy, based on the fact that the stability that we're looking at for the Naira to be at 1,500 by December, if all of these initiatives are not being introduced and being followed through, there is no how we would be able to have Naira stabilized at 1,500. On that note is how much time will permit us to take on today's edition of Business Points. My name is Samuel Odi. I want to say many thanks to you all that sat and watched today's edition of the program. I'll see you again as we talk more business. Bye for now.